Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the Financial Market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be about reviews, and these are the names that I have covered in past videos, and I will do a quick review on each of them. Next, I will begin covering these names and review them in upcoming videos. I've put in timestamps, so please use it to skip to the names that interest you. I highlighted a few points about the S&P 500 in the video on the 22nd of December. It's a bit lengthy to reiterate them here, so please go watch the video instead to get more details. In short, the S&P 500 remains under the influence of a bearish pattern, a rising wedge that has a textbook target at 5,364. My speculation that the S&P 500 could be forming another bearish pattern proved to be true. Let me just show you. I was speculating that price action could be forming a head and shoulders top. And we can see that the price action has completed the second shoulder and completed its head and shoulders top. This does not have a strong significance in terms of price action, because the textbook target resulting from this head and shoulders top is just at 5,609, whereas the rising wedge has a textbook target of 5,363.96. Still, this underlines the bearish intent of the S&P 500, because there are two bearish patterns forming within a short time span. So staying bearish on the S&P 500, targeting 5,364. I noted in the video on the 15th of December last year that NVIDIA may be forming a bearish pattern, a head and shoulders top. We have had completion over here on the 16th of December of this head and shoulders top. The bearish textbook target is at 111.38. Now since then, NVIDIA has completed what is very typical of chart patterns. We have had the completion phase, we have the corrective phase, and I believe now NVIDIA is in the bearish resumption phase. Note that the last 3 days of price action suggests a significant downside bias to NVIDIA. Firstly, we have this candlestick over here, which is a bearish engulfing candlestick. Then price action closed within the cloud, and finally in the latest price action it closed below the 20-day simple moving average, all of which suggesting further downside going forward. So staying bearish on NVIDIA with a textbook target at 111.38. I noted in the video on the 15th of December as well that Apple may be forming a rising wedge, a bearish pattern, and I'm waiting for rejection at the resistance trend line to be convinced that there is a good chance of a bearish pattern completion. I actually have adjusted the resistance trend line to fit this rejection over here, and after this adjustment, the textbook target of this rising wedge, should it be completed, is at 181.39 instead of the initially stated 176.46 noted in the last video. Still, price action appears to be holding around the support trend line, so a bearish confirmation is only valid if there is a breakdown below this support trend line. So we have to wait for another week to see whether Apple actually breaks below the support trend line, or will it bounce back higher. I highlighted Microsoft's bearish potential in the video on the 13th of October as a head and shoulders top, and I identified the second shoulder as this one over here. Now since then, Microsoft advanced but failed to push much higher, and yesterday we saw Microsoft closing below the 20-week simple moving average. So this week's price action also formed a bearish engulfing candlestick, closing within the cloud, closing below the 20-week simple moving average, all of which suggesting further downside. I now believe that the second shoulder is formed in a different area instead of the one over here. It is actually more appropriate to say that the second shoulder has formed over here. Nonetheless, this doesn't change the bearish potential that we see in Microsoft, even though the second shoulder is slightly higher, or rather higher than the first shoulder. This bearish pattern is still valid and will only be invalidated by a break back above the last high, which is 468.35. Until then, as long as Microsoft continues to fall, I will still see Microsoft as having bearish potential. This bearish pattern will be completed via a weekly close below 388.06. Textbook target is at 308.92, and I have cautioned that there are two firm supports. First one at 350.64, followed by 365.8. This firm supports could bounce Microsoft higher and prevent it from ever reaching this low target of 308.92. Similarly, I also have to make some adjustment in Roche Holding. In a video on the 20th of October, I highlighted that Roche Holding may have formed the second shoulder of a head and shoulders bottom over here. I need to make a revision in this video. The second shoulder is very likely here now, instead of where I first identified. So this is fine. The bullish structure is still valid. A close above the neckline, downward sloping currently, it's around 286.8, will complete this bullish pattern that has a textbook target at 362.5. There is a firm resistance at 335.1 that can prevent Roche from going much higher. In a video on the 15th of December, I highlighted the prospect of IBM forming a double top, a bearish pattern. Recent price action development is encouraging. First, over here, falling below the 20-day simple moving average, and then got rejected over here by the same resistance and closed again within the Ichimoku cloud. I think IBM remains on track to complete this bearish pattern via a close below 204.07, and if this happens, the textbook target is at 170.75. I'll move on to names that I will cease coverage on in future videos. First one is on Verizon Communications. I noted in a video on the 15th of September that it has completed a head and shoulders bottom bullish pattern, but price action of late has fallen below the low of the second shoulder, which now invalidates this bullish pattern. In the video on the 8th of December, I stayed bearish on dollar yen given the completion of a rising wedge, which is a bearish pattern. The textbook target of this rising wedge was at 143.93. Now, dollar yen fell to a low over here at 148.63, reaching only 60% of its textbook target before rebounding thereafter. I believe the rising wedge that I identified in November has been invalidated, and I will now cease coverage on dollar yen. But I believe something new is developing, so stay on and watch towards the end of this video where I will renew a coverage on dollar yen. Finally, I will cease coverage on Xiaomi Corporation as well. I noted the formation of a rising wedge in a video on the 10th of November, but price action on the 27th of December broke above the resistance trend line, and this has invalidated Xiaomi's bearish pattern. Moving on to new coverages, I am starting a new coverage on dollar yen because of a potential formation of a rising wedge, a bearish pattern. Now, don't get your hopes up because, as noted in the previous section, dollar yen actually completed a rising wedge somewhere over here, but did not fully reach its textbook target. It achieved only about 60% of its textbook target, falling to a low over here before rebounding. Price action on the 10th of January suggests that there is rejection at the resistance trend line. Also, price action throughout this duration failed to test the upper Bollinger, suggesting that upside bias may be weakening. What will give me more confidence that there is bearish intent in the dollar yen is a close below the 20-day simple moving average. But of course, only with a close below the support trend line will this bearish pattern be considered complete. Anytime dollar yen rallies above the resistance trend line, this bearish pattern is invalid. In the video on the 29th of December, I have shown that there is bearish potential in the dollar index, the DXY. This is still valid. You can go watch the video for more details. I believe that euro-dollar bearish right now has bullish potential. It is forming a falling wedge, a bullish pattern, and the downside may just have bounced off the support trend line on the 10th of January. This bullish pattern needs a breakout above the resistance trend line to complete, and the textbook target is around 106.66. A breakdown below the support trend line will invalidate euro-dollar's bullish potential. While waiting for the euro-dollar to break out, euro-sterling has broken out of its falling wedge. This bullish pattern has a textbook target at 0.8521. Price action has closed above the cloud, which is bullish territory, but I will advise caution over here. Let's zoom in on the price action, and we can see that price action has rallied for 3 consecutive days, and this usually leads to some form of pullback first before upside resumes. Also, price action has overextended above the upper Bollinger, and this risks a 1 to 3 days worth of corrective decline. As long as euro-sterling does not close back below the cloud, a bullish outlook is expected to prevail. Moving on to equities, I only have one name to cover in this video. Intel, it has fallen a lot after completing and resolving its head and shoulders top back in March last year. But in recent months, let's zoom in on the price action. I believe that in recent months, Intel has found a bottom. And I suspect that Intel may be forming a double bottom, and this bullish pattern requires a weekly close above 26.43 to complete. The textbook target will then be at 34.47. If Intel breaks below 18.51, then this bullish potential is lost. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.